What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update, as well as some announcements and news that I think you guys really would like to hear. So without further ado, let's dive right in. Currently, we are at 1,057 subscribers. We have 44 videos on the channel, and I am currently filming the 45th video, which is also the 43rd portfolio update. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, if you are not new here, you can skip over this part, but for those who are new, this is my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. Now, I have two sources of income. One is remote work income, pretty stable, pretty consistent, and the other is business income, which does fluctuate up and down depending on the seasonality of things. And I have committed to contributing anywhere from $300 all the way up to $1,000 plus per month into my Robinhood taxable brokerage. And I'm treating this brokerage like a business with the goal of aiming for 30% plus high yield. And the way that I am hoping to achieve this is through investing into high yield and stable income ETFs. Now, those are two different types of funds, but they both pay higher incomes than more traditional dividend growth stocks, okay? With that being said, these are some examples, but of course there's plenty more. So KQQQ, QDTE, BLOX, HOOW, Chippy, and more. Now, I have committed to having a max of 5 to 7 positions for these types of funds, and I'm alternating between anchors and satellite ETFs. So if you're not familiar with that, that's part of the core satellite investing strategy, investing approach. You guys can do your own research on that if you're interested. And I will be reinvesting the weekly and monthly dividends through manually dripping. So basically, I'll be stacking the dividends to purchase whenever the market is down. So drip plus always compounding is the portfolio growth strategy. And basically, I'll be rinse and repeating this until my account hits $1,000 a month in dividend income. Now, again, disclaimer, none of this is financial advice. This is for entertainment purposes only. I am just some random guy on the internet. So don't copy me, don't follow me, don't seek anything that I'm saying as advice. This is strictly me documenting my journey and entertaining all of you. You guys get to see whether I succeed or I fail. Now, last, before we dive into the portfolio, I wanted to share my dividend income milestones while I grow my small portfolio. This is so I can celebrate the small wins leading up to the bigger goal along the way. And yeah, so far for this month, we have already achieved the first and second goal. This is primarily due to my previous portfolio that I sold off entirely and had to restart. But this is where we currently are at. And you guys can pause this video here so you can check out all the milestones leading up to the big goal. Next month will be really telling of how much income I'll be able to earn with my current capital, my current investments and such, but we'll see. Diving into Robinhood to see the portfolio, we are currently sitting at $5,576.82. which is actually pretty good. We're higher than yesterday. As you can see, we did get a little bit of a rally right at the start of 8 a.m. And that's pretty good. I'm very happy. We were up 0.89%, I think, in total. Maybe this is not correct. Maybe 0.91. I don't really know. It's obviously including the past week as well, but just something to keep in mind. And if we open this up, as you guys can see, I currently have $3,803.28 in cash. I have $7,611.42 in margin available. Nothing has been used yet. And then in total, that equals $11,414.70 in buying power. Now, something to keep in mind is I did actually submit some orders pre-market for key positions. So I put in an order for GOOW. I put in an order for Chippy. I put in an order for QDTE. And I think I put in an order also for KQQQ. All of them got canceled, unfortunately. The only one that actually went through was BLOX. So I did acquire some more BLOX yesterday, so I'm really happy about that. And I just got very fortunate. All the positions that I wanted to buy, they ended up actually going up yesterday. So I'm a little bit upset, but I'm just going to have to wait and be patient, or at least look into maybe a possible other fund to invest into in the meantime. So we'll see about that, but let's dive right into the positions here. So first we have KQQQ. It's currently sitting at $28.97 a share. My market value is $434.55. I am up $8.10 or 1.90%. My average cost per share is $28.43. I have 15 shares with a portfolio diversity of 24.50% and a maintenance ratio of 25%. So we are looking good here. There is no distributions yet because it's a monthly payer, but I just wanted to share that with you guys. Next, we have Chippy. It's currently at $54.52 a share. My market value is $381.64. I am up $2.86 or 0.76%. My average cost per share is $54.11. I have 7 shares with a portfolio diversity of 21.52% and a maintenance ratio of 25% as well. Then we have QDTE, which is $34.46 a share. My market value is $241.22. I am up $2.72 or 1.14%. My average cost per share is $34.07. I have 7 shares with a portfolio diversity of 13.60% and a maintenance ratio of 25%. Next, we have BLOX. BLOX has been crushing it. We did over 10.15% in a single day, so I'm really happy about that, but it's at $18.58 a share. My market value is $222.96. I am up $1.16 or 0.52%. My average cost per share is $18.48. I have 12 shares with a portfolio diversity of 12.57% and a maintenance ratio of 25%. Next, we have GOOW. It's currently at $78.09. My market value is $156.18. I am up $13.58 or 9.52%. My average cost per share is $71.30. I only have 2 shares. I did try to buy some yesterday, but unfortunately it just didn't go through, with a portfolio diversity of 8.81% and a maintenance ratio of 30%. As you can see, we did get paid our first distribution from here, so it's about $1.06. So that's pretty cool to see. I'll make sure to add that to the dividend log a little bit later. Next, we have NVDW. This will probably be a fund that I possibly invest into today because it is below my average cost per share, but it's at $41.80 a share. My market value is $125.40. I am down $3.12 or negative 2.43%. My average cost per share is $42.84. I have 3 shares with a portfolio diversity of 7.07% and 30% maintenance ratio. And again, we also did receive a distribution for this. So I got paid $1.55, and that's because they paid out 51 cents per share, and I have 3 shares. Next, we have PLTW. It's currently sitting at $35.79 a share. My market value is $107.37. I am up $3.12 or 2.99%. My average cost per share is $34.75. I have 3 shares with a portfolio diversity of 6.05% and a maintenance ratio of 40%. And we also did get a dividend payout here of $1.56, and that's because they also paid out 51 cents per share, and I have 3 shares. And last but not least, we have HOW. It's currently at $52.11 a share. My market value is $104.22. I am up $6 on this position or 6.11%. My average cost per share is $49.11. I have 2 shares with a portfolio diversity of 5.88% and a 30% maintenance ratio. And again, we also did receive a distribution from this one. This was $1.57, and that's because they paid 78 cents a share, and I only have 2 shares. Now, real quick, I did want to dive into the dividend log here that we have. So everything is pretty much in the green, and if we actually hop into Robinhood, there's only one position that's technically not in the green. It's down about 2.43%, so that's why I'll probably be investing into this, and that's NVDW. But outside of that, as you guys can tell here, everything is looking pretty good. So I like to look at market return and total return. This helps me keep track of things. But before we cover this, I do need to update my dividends. So let's hop into there first. All right, so I was able to finally update all the dividends. As you guys can see here, this number has changed. So let's dive right into the market return and total return. So I am up 2.15% on BLOX. I am up 8.99% on HOW. I am up 1.30% for NVDW. I am up 5.58% for PLTW. I am up 7.38% in GOW. I am up 1.99% for Chippy. I am up 1.73% for QDTE, and I am up 1.90% in total returns for KQQQ. So that's all my total returns so far. So that includes the dividend or distributions that I received from each of these funds. And then let's hop over into market returns. So that's without the distributions, all right? Without the dividends. So we are up 1.73% for BLOX, 7.39% for HOW, 0.09% for NVDW, 4.09% for PLTW, 6.63% for GOOW, 1.44% for Chippy, 1.26% for QDTE, and 1.90% for KQQQ. So the portfolio is doing pretty well. I'm a little bit sad that I only have 31.89% of my cash invested into my portfolio. So I am sitting on quite a bit, but who knows? I do think we will still see some pullbacks here. I just was kind of a little bit bummed that I wasn't able to get more into the positions that I really wanted, but maybe I'll be able to invest some more into some of my leveraged round hill funds, as well as QDTE, Chippy, and maybe BLOX or more. We'll see. It all just really depends on how the market continues to perform. Now, I'm hopping over here into the dividend log. Now, I'm going to zoom out a bit so you guys can see a bit better. So far, these are what we have received for each of these funds, which I'm not going to really go in depth on the individual. But if we take a look here for the month of November so far, we are at $262.94. And for the year, that equates to $579.25. And if we take a look here, we are $737.06 away from our $1,000 a month goal. So, pretty far off. But again, like I mentioned, next month will be more telling about the whole situation in terms of how close or how far I am from my goal, because I did reset my portfolio. And just so you guys are aware, for this week alone, which is the last week of November, I believe, we are at $6.66 in dividends received so far. We still have Chippy and QDTE, which I believe will be paying us. And I think, actually, I could be wrong, I think we're going to get a KQQ position or distribution as well. So just stay tuned for that. But this is exactly what the numbers are looking like, just in case you guys are curious. Hopping over into the contribution calculator, for those of you who don't know, I compiled this calculator in order to determine how much I would need to invest into each of these funds to keep my allocations according to the target that I have set. So I have originally did all this, and it tells me exactly what my target allocation is and how far away in percentage I am from achieving that allocation. So we're going to quickly break this down, and then I'm going to cover how many shares are my goals for each of these funds. We are 5.96% away from achieving our goal for BLOX, 8.11% away for HOW, 7.70% away for NVDW, 8.06% away for PLTW, 7.28% for GOOW, 23.12% for Chippy, 15.68% for QDTE, and 2.22% for KQQQ. So I created this in an effort to properly balance my portfolio at any point in time. Now, this is going to fluctuate depending on the fund, how it's performing. Is it outweighing others? But for the most part, I'm trying my best to stick to this based on the amount of funds that I originally invested. So I kind of did this neat formula where it'll tell me how much cash I would need to invest to achieve this allocation percentage, or how much it would be in total. So these are the number of shares that it calculates, and this changes daily because it's based on the current share price of each fund. But these are the target shares I originally set out when I created this calculator. So I'm 18 shares away from achieving my goal for BLOX. I'm 8 shares away for HOW, 9 shares away for NVDW, 12 shares away for PLTW, 10 shares away for GOW, 24 shares away for Chippy, 25 shares for QDTE, and 4 shares away for KQQQ. Hopping over into X. If you guys aren't following me, I would really appreciate it. Currently, we are sitting at 47 followers on X. My goal is to reach 100 followers by the end of this month. And yeah, I basically post updates, my opinions, speculations on the market, whenever I buy or sell things as well, and so much more. So if you guys want to give me a follow, it's at I'm Nomad Investor. Again, that's at I'm Nomad Investor. I wanted to hop into this post first by High Yield Hustle. It says high yield thoughts with a brain emoji. It says, during this pullback, a lot of people who are new to this style of investing are confusing NAV erosion and a pullback of the underlying assets. So I wanted to highlight the difference. NAV erosion stems from heavily capping the upside of the stock or asset the fund is trading on, typically via covered calls. Most of the time when you see those massive 80% yields, this is how they are harvested. This can also stem from overpaying. Pay more than you cleared in profit, then you have NAV erosion. The easiest way to check this would be asking, did the fund price trend down in a bull market? If the answer is yes, then you have NAV erosion. Not all funds erode. The difference lies within the strategy. Are the covered calls far out of the money? Are they using put or call spread puts or call credit spreads? Are they letting some of the holding run for upside? Are they using leverage or swap agreements? These are all various ways to harvest yield without eroding when used correctly on a good underlying. That underlying can also pull back. If Bitcoin drops, then of course a fund trading on Bitcoin is also going to drop. And a good fund that is very different from NAV erosion. The best way to see this is monitoring how a fund handled prior pullbacks. Check to see if it was able to make a full recovery and even make a new high. Do not ask yourself these questions after buying a fund. You need to know the answer to all of these before you buy. If you don't, you'll just be another person saying, what happened to MSTY? So this is all really good stuff to know, especially for me being a beginner in high yield investing. And yeah, I mean, I'm pretty happy about the positions I'm in. I know the risk. I have experienced the risk previously, especially with these leverage funds. And with my new strategy, I plan on properly allocating everything and balancing my portfolio as much as possible. Now, I plan on never selling the positions unless for some reason it is actually experiencing NAV erosion and the fund is dying of some kind. It would have to be that drastic of an event, but now I am prepared to take the massive hits that is going to come with it and also the massive gains that are going to come with it as well. But overall, I'm pretty bullish on the stock market as a whole, especially the tech industry. Now, of course, we could still experience a massive pullback. We could experience a potential bear market at some point in time. However, during that time, I will probably just end up buying more, leaving the funds that I have invested in and just kind of stacking up more shares for these income paying positions. And that will help me once we return, once we rally back into a bull market, again, if ever we enter into a bear market. So I hope this all makes sense. This is in response to that post we just read. So it's also from High Yield Hustle. It says, high yield investing has a rampant problem of asking all the questions about an investment after you made the investment. If you know the strategy, it's extremely obvious how certain funds will behave in certain market conditions. This is so true. A covered call position is not going to perform the same way a leveraged strategy is going to perform. So if you have swap agreements, if you have covered calls, if you have put credit spreads, different strategies have different reactions under certain market conditions. In a bull market, to be honest, leveraged funds are going to crush it. In a bear market, they're going to be so bad. They're going to be terrible, but it is what it is. That is the risk. Next, I wanted to share some cool news. So this was yesterday from Top Dividend ETFs. I've been sharing a little bit more of their posts lately because I've been liking their overall X account, but it says BLOX was up 7.5% today. Now this was posted yesterday. It said, beautiful. Who else bought the dip last week? Well, I did. And I want to continue buying as long as it's around the $18 mark. I think that is a bargain. That is a steal of a price. But of course, we do have to be mindful. There is still a lot of uncertainty in the crypto space, specifically surrounding sentiment over Bitcoin. And I'm not really sure. Typically, we get a crypto Christmas dump, as I like to say. There's no bull run usually from my experiences. But of course, all things can change. We have no idea. The market has been performing very different than it has traditionally in previous years. So that's just something to keep in mind. But I am pretty bullish on BLOX, but I will be capping my allocation with this because I don't want overexposure into crypto in my portfolio. So that's why I have it only 10% for my BLOX position, okay? Next is another post by High Yield Hustle. This is for everyone who does not like single stock ETFs. A lot of people have been asking me, why are you invested into some of these single stock weekly pay ETFs from Roundhill versus just WPay? And you know what? Everyone is different. I'm here for the income, and I kind of have come to that conclusion. And I honestly realize that WPay, although it's a fund to funds, it's going to be adding more and more funds over as time goes on. And I would love to see how it's going to perform because I'm not very bullish on a lot of the funds that it holds as a whole. There's only certain key ones that I really like a lot, which I personally am holding myself. Anyways, this is what it says. It says, hate playing single stocks. Here's how much dividends you'll get paid per week through $20,000 in these indexed funds. So WPay would pay you around $180 a week. Chippy would pay $153. BLOX would be paying $138. GPTY would be paying $134, and Maggie would be paying $130. I would say if WPay was able to get rid of some of their crap weekly pay ETFs that are holding in there, then I would change my sentiment. But it is a passively managed fund, so just keep this in mind. There's no active management. So as a result, when they do the rebalancing, you are going to get what you get at that time, unfortunately. But this doesn't mean that I'm not bullish on WPay. I just want to be clear. I still think it's going to perform overall well, and I do think it's already on track to be a consistent payer. Like it's already back at 44 cents a share, I think. Now next, another one from High Yield Hustle. I'm just doing High Yield Hustle today. There's not really much else that I want to share, but it says, how much capital to get paid $1,000 per week in dividends? Man, this is a dream right here. I would love to be getting paid $1,000 per week. I'm already aiming for $1,000 per month. So can you imagine $4,000 a month for 4 weeks? Oh man, that would be beautiful. So anyways, it says TSII, $52,000. That's pretty good. I didn't realize that TSII from Rex Shares could pay that well. AMDW would be around $52,000 invested in order to get $1,000 per week. HOW, $63,000. PLTW, $67,000. NVII, $92,000. NVDW, $83,000. WPay, $110,000. Chippy, $140,000. BLOX 145,000, GPTY 148,000, and Maggie 155,000. And just to clarify, this is not financial advice. This is just pure theory. This is how much you would need according to this post, not financial advice by me, in order to earn 1,000 per week in dividends. Last but definitely not least, we got one from Richie B, aka Wanna Be Fresh. He says, keeping my high yield port simple. HOOW, online brokerage, fintech, crypto. AMDW, semiconductors and AI. NVDW, semiconductors, AI, GPUs. PLTW, software, data analytics, AI. And TSLW, EVs, robotics, clean energy. That's his whole playbook. So that's really interesting. He did post this on the 23rd, so I believe that was Sunday. But it's very interesting to me. This is a really straightforward portfolio, and I like how simple he's keeping it in the positions. Of course, higher risk being that they're leveraged funds, but this is something that I think makes sense when you're getting paid these higher incomes, okay? Now, hopping over into Yahoo Finance, I'm not really sure. Things are not looking like it would be a green day today. So far pre-market, the futures are down. So for S&P, it is currently sitting at negative 0.20%. For Dow, negative 0.16%. For NASDAQ, negative 0.36%. For Russell, negative 0.14%. The VIX is up 0.10%, so it's not by much, but it's currently sitting at 20.54. And gold is up 0.80%. So that's how things are looking there. And let me minimize myself a little bit here. It says, U.S. stock futures stall after tech's biggest rally since May. And then it says NVIDIA stock drops on report of Google challenge in AI chips. So Meta is in talks to spend billions on Google's AI chips, the information reported. Yeah, so this is very bullish news, especially for GOOW. This is actually a position that I really want to invest in more. Looking at the chart of Google as a whole and its performance, it's fairly stable. It doesn't have dramatic movements like some of these other tech stocks, but it has been around for quite a long time, and I believe it's here to stay. They invest in so many different parts of their industry, and they're always willing to expand into other sectors when it makes sense to their overall game plan, business, and products. So that is why I am going to continue to invest into GOOW, and I'm really looking forward to the future. So honestly, I was really happy that I invested into it. If you guys invested into GOOW or any Google weekly pay or high income ETF, or let alone the Google stock, congratulations to you. That was a smart move. Anyways, guys, I hope you enjoyed today's portfolio update. If there is anything you would like me to cover in conjunction with what I've already shared, please comment them down below. Give me some ideas. What do you guys else want to see on the channel? If you have any comments, questions, suggestions, or feedback, comment them down below. I'll take a look, I'll read them, and I'll go through the comments, and I'll try my best to respond to just about every single one of you within reason. Of course, I do have limited time. Also, if you are new here and haven't already, smash that subscribe button. It really does help keep me motivated to continue making videos like these. And most importantly, for everyone else, smash that like button. It helps with the YouTube algorithm, and most importantly, helps with growing the channel. So without further ado, until next time, guys, peace.